welcome out to today's advisory report. It is June 25th, 2026. As we are looking at the market gauges, we are in the same position we have been the last few days, an uncertain last few days. The intermediate trend remains bullish. The short-term trend is a bit bearish, having us play slight defense in our portfolios. All that basically means is for the more aggressive portfolios, if the market starts to kind of roll over, we're in a little bit of a defensive position, so we won't roll over quite as much. And also, if the market rips back up, also we're in a little bit of a position to where we won't quite get the returns. But the positioning of the market right now makes sense for us to have that kind of exposure model. Let's go ahead and look at the intermediate trend. As you can see, we are above the 30-week moving average. Therefore, we are bullish bias. We're giving the market the benefit of the doubt, looking very constructive as it kind of winds sideways here. Looking at the short term, here's what I mentioned before, where we're kind of between the 20-day moving average, which is short-term bullish, but still finding support on the 50-day moving average. And so we'll see what happens in the next few days. We could be setting up for a little bit of a bear flag, which means we might have some more short-term down, but any kind of news events could pop this back over the 20-day and we'll be back into trend moving up. We're just playing it day by day. And like I mentioned, in our more aggressive portfolios, we're playing a little bit of defense right now to try to preserve some of the gains that we've made over the last handful of months. Let's go ahead and look at the market lens. Let's check out a couple of the positions that we have inside the ultra aggressive. We've already talked about the SP 500. We do have a bit of a hedge going on in the ultra aggressive, and this is basically when the market goes down, this will go up. When the market goes up, this will go down. So we have a little bit of a hedge on. MU is in the portfolio. Earnings were yesterday. We were talking yesterday about how it was gapping up after hours. That gap up followed through to the upside and up 15% on the day. So beautiful returns right now. New highs. We did take a little bit more off the table as far as profit is concerned on MU, but we still have a little bit more of a position in that. It's been a great play for us. Let's go ahead and look at Flex really quick. Flex was a recent buy. Today, gapped up and started just kind of running at one point up over 9%, finished the day at about 7% up. So good returns for the ultra aggressive today for that one. Let's go to MRVL. Still playing that little game of opening, selling off, and then finding buyers around the 20-day moving average. We still have a position in that one. We took a new position in LLY today. Eli Lilly, just looking at a very constructive base right here, and looks like it wants to turn back up. We're a little bit under where we bought it at, but we'll see how that plays out the next few days. CrowdStrike, a nicer sized position in our portfolio, still doing its thing, moving sideways. Hasn't decided to break out to the top or break out to the bottom, but in a nice uptrend. So we want to be in position in this, a fast mover too, if it does turn back up. That's what I got for you today. Take care. Have a wonderful afternoon. We'll be right back at it tomorrow.